What is going on, YouTube family? Welcome back to another episode of swing trading, day trading, technical analysis on the NAS100. I hope you guys have had a phenomenal week with your trades. There were a couple of okie dokes in the market that we're going to be talking about right now, so make sure you stay watching all the way to the end, because there's going to be a lot of useful information in there that I believe you guys are going to find super useful. So with all of that covered, we're going to get straight into it. But the first thing, we're going to talk about the analysis last week, because a few things went wrong, and I just want to kind of share with you guys how you can kind of best protect yourselves in the market, even though you may get, say, I don't know, an analysis video from somebody like myself. It's also super important that you learn to do the homework yourself, do the research yourself, make sure everything you're hearing is making sense before you commit your hard-earned capital to any trades. Because once again, like I always say, I am not a financial advisor. I'm not giving you financial advice. I'm just a regular person that loves trading, and I'm just sharing how I like to do business in the market with you all. And I'm hoping, my intention is that there's going to be some gems in there that you can use yourself to help you along your journey too. This is not the finished product. This is not something that I'm expecting you to jump on and it's just gonna make you into a trillionaire overnight. This is a marathon. It's not a race. It's not a 100-meter dash. It's a marathon, right? And it requires work, it requires patience, and it requires discipline, right? And you combine all of those together alongside with the experience. Bottom line is, you're going to be way more successful in the market, and you'll be able to identify the dynamic nature of the markets to make sure that you're always facing in the right direction, because market does what market wants to do, and that's just end off. There's nothing else we can say about that. Market does what market wants to do, and that is that. So what I'm going to do now is briefly talk about what I discussed with you guys last week. Okay, so last week, some of the recommendations that I put in my last video, and once again, it was not financial advice, right? One of the recommendations that I put in the video was that if you wanted to do anything in the market, you needed to put a sell alert at this level right here, okay? And you needed to put a buy alert at this level right here, okay? So in your case, for if anyone was just following this with blind faith, okay, both alerts would have triggered, and I talked about the dangers of that in that last video that I did for you guys. So I definitely said that you can get the okie doke with this. Both of these levels can be triggered, but you have to use due diligence to make sure if everything makes sense before you do anything in the market, right? It's highly recommended. So on that Sunday's video, okay, this is what I said, right? Alerts up here, alert here, and depending on what is taken, you want to follow the direction of this one. So if the high is taken, you want to be putting in buys. If the low is taken, you want to be putting in sells, right? So what happened last week was we had a trigger, okay? We had a trigger off that last week, right? And what essentially happened was price came back down again. So price came back down and gave us a head and shoulders, right? So if you were following this blindly without doing any homework, right, this was some of the stuff that you needed to know to help you navigate this properly, right? So he gave us a head and shoulders, and we got the head on the Monday and the shoulders on the Tuesday. That's what happened, right? So personally, how I traded last week was, on the Tuesday was when I entered the market first time for the week, right? Of that week, right? And that would have been the first. So, no, that would have been the second, sorry, right? So during that week, I was able to identify that we was in a head and shoulders in this location right here. So what I did was, I waited for this level here to be taken out by the market, right? So I waited for this level over here to be taken out, right? And then I took my sell on this candle right here, right? I took my sell from this candle right here, and then as soon as this one closed, I brought my trailing stop. So my stop would have been in the most logical position, but I'll show you guys anyway. So my stop was up here. I was covering this location, right? So as soon as I got this second candle over here, I moved my trailing stop down here. Simple as, right? And then when I got the next candle, I moved my trailing stop down here, because I was still off the mindset the price was going to be pushing up. I was still off that mindset that price was going to be pushing up. So when I finally got closed out, I was able to gain in this location over here. So my Tuesday pretty much was a day trade. Got in, got out, smooth, without incident, right? Okay, so then on the Wednesday, when I got up, before I headed out to the office, I did a quick analysis and I could identify this area right here. This was the area that I identified first off, that we had this channel, given the probability the price was going to push up, right? So I just monitored the situation, did what you do, monitor the situation, right? So as soon as we had this bearish candle, right, this order block right here, okay, because it's a standalone. So as soon as we had that over here, I then took a measurement of the FVG that had just been created, right, which is this from over here to up here. And then soon as price came into that FVG, I put my buy right here. So if it went above it, I would then be triggered in nicely with a buy. So I entered that, price flew up great, and once again I came in with my trailing stop, because that is my favorite tool, right? Came in with my trailing stop and I began tracking the move. So I got my trailing stop as high as this level over here before I was triggered out, right? And then from that point I did nothing else in the market. I didn't do anything else because I've gained. I'm not going back in. There is no point. So obviously towards the end of the evening was when we had the FOMC report come out, and market did all of that. So this massive drop to the downside, I did not get any of that, right? I didn't get any of it, right? So that was that. And then on the Friday, I didn't do anything either because it was an NFP. So I stayed out the market on that day. And what I wanted to do was I actually wanted to get in, but I didn't get in. So essentially I did two trades. I did one sell and I did one buy. I won them both and that was great, right? And the only way I was actually able to do that was I kept myself dynamic in the market, which is last week. This is what I said. You don't want to, you want to buy from up here and you want to sell from under here, right? I didn't buy from up here, but I sold. Okay, I sold from over here, but it did go under this level right here, right? Now there were many of you that would have bought up here, right? And then price would have done that. You would have covered this zone that I said hold as a stop loss, right? And then that would have then done you dirty. And for that, my apologies. But once again, not a financial advisor, not giving you financial advice. You're the one on the back end pushing the buttons, right? So it's important you do your homework and not to go off just blind faith. This thing is super, super, super important. Okay, so that was my last week, right? So the whole of last week was a win, and I'm happy about that. So moving forward, we're going to look at the analysis for this week, and once again we're sticking to the same rules that we always stick to, which is weekly highs and weekly lows being taken out, right? And the reason why I keep going on about this stuff is because it is serving me very, very, very well, right? So I'm going to stick with it. I hope you guys are able to follow through with it. If you aren't able to follow through with it, it's not a problem. It's not bad. It's not an issue. This thing that we're a part of, which is the trading community, right? Basically, it takes a lot of work for you to be able to fully understand what is happening. And even me myself, I partially understand what's going on. I don't fully understand what's going on, and that's something that I'm working towards. And that actually is one of the main reasons for this channel being here, is to help me do that, right? So what we want to do for week commencing the 8th of April, right, or what I'm going to be doing for the week commencing the 8th of April, is I'm going to be looking out for weekly highs being taken out and weekly lows being taken out, and then I will use that as my guide to navigate the market based on what market is doing. So weekly high is going to be set for us at 18427.5. That is the weekly high, right? Let's put a label on that. And then the weekly low was set for us on Friday. That's it right here. go. And that level is going to be 17870.1. If either one of these levels is taken out, that's when I'm going to be making decisions to make sure that I'm facing the corresponding direction of where market has been taken back and taken down, in anticipation that it also may pull back. And a good reference point for that situation is what we had over here. So we had the weekly low of this week, which would have been week commencing the 25th of March, right? It was taken out on the Tuesday, so price came in, took it out nicely. I made a nice little bit of gain that way, right? And then price then went back up again, right? It went back up and then flew all the way down, right? So had you have taken that move, it would have worked out. But me personally, because I knew this was FOMC and whatever direction market was going to go in, I protected my trades. So as soon as it kind of went bad, I was out, and I was out with what I could get from the market at that time, right? So next week, that's going to be the vibe, right? That is going to be the vibe. Also, it's also super important that we're also mindful about this one thing as well that is currently taking place. I want market to keep going up for as long as possible, but however, there is a situation that we need to be aware of. I'm just going to turn off all of the drawings for now. I'm going to go into a day and I'm going to show you. Okay, so as it stands right now, okay, we have a massive buildup of price at this location. Okay, so if you are bullish, you might need to be careful. You might need to exercise some caution, because there is a probability that it could actually pull all the way down and give us a really big drop. So you want to be aware of the fact that price could drop down because it's starting to consolidate, right? We're getting a lot of consolidation on the upside right now. We had the same kind of situation up here, and then it gave us that massive drop to the downside. So let's be sensible in how we enter the market. And once again, it is super important that you do the homework. Okay, the homework is worth it, and there are links in the description to books that I think will definitely help you. So go check them out if you haven't done so already. And obviously, most of you will not have time for books. I don't know why, but people just don't like reading. I don't know why. It's one of the best things in the world, right? But however, people just don't like doing it. But bottom line is, if you're somebody that doesn't like reading, okay, I've put together 21 videos of backtesting videos that's at the end of this video, right? And go check them out. There might be something in there for you. So if trading weekly highs and weekly lows, you're finding that a little bit difficult, then I do have backtesting videos with indicators that could help you as well. But the thing with the indicators is that there is a lot of idle time, a lot of waiting time. Sometimes you're going to have to jump around markets to find the one that meets your conditions, okay? So you would never fully be able to, say, for example, master one market and use that information to navigate the rest of the markets, whether it be cryptos, whether it be, I don't know, stocks, whether it be, I don't know, futures, whatever, right? So if you just want to get into the market and make profits, right, then the backtesting videos, I believe, will help you. That was my system a while back. I don't use it anymore because what I'm doing now, I think it's far more effective. I'm able to be in and out of the market daily, and it just works out great. So with nothing more to say or to do, go check out the backtesting videos. I think there's gems in there that will help you, right? We look at moving average cross, we look at the Ikimoku setups. So there's tons of stuff in there that I believe will definitely help you, and I think you should go check them out. And with all of that covered, my awesome people from all around the world, I want to thank you for coming over to watch another episode of Swing Trading, Day Trading Technical Analysis on the NAS100. I wish you the very best for your trades for next week, commencing the 8th of April. And I look forward to seeing you in the next video, which will be very, very, very soon. So for now, it's Pips and Points signing out.